Hey, what's going on, traders? Thanks for checking out this video. My name is Travis from Master the Market, and in this one we're going to be talking about the top 3 signs of a stock market reversal. So without wasting any time, let's get into number 1, which is going to be to look for higher lows. So in any kind of trend, whether that's an uptrend or a downtrend, there's going to be pullbacks and there's going to be dips along the way, and there's also going to be peaks and spikes along the way. So what we're looking for in order to help us spot the bottom and catch that reversal to the upside in the stock market is going to be higher lows. We want to see that the pullbacks or the dips are starting to form above the previous ones, and that's exactly what a higher low is. Now, generally speaking, when a stock is in a downtrend, it's consistently going to be making lower lows. So once we see the stock start to form some higher lows, that can indicate to us that the stock is ready to break out of that downtrend and potentially even start an uptrend. And just to quickly give you a visualizer of what this may look like, you can see here with this diagram, we initially are starting off with a downtrend. The stock forms its initial bottom or its initial low, and then it starts to bounce back up a little bit. And generally speaking, the first bounce after a stock has a big sell-off is going to be a fake bounce. Usually the stock will pull back and retest that level. If it is going to remain in a downtrend, obviously it will break below that level and it will continue to make lower lows. But in this case, what we get is a higher low. The pullback or the new low is slightly above the previous low, and that's going to be our first reversal sign here for this example. That would also be a good indicator to buy into the stock, so that way you're able to catch it breaking out of that downtrend and start to ride that momentum then to the upside. So very quickly, I wanted to jump over here to the Thinkorswim platform to show you a real life example of this. And if we take the chart here for SPY, we're looking at the daily chart. If we zoom in a bit, we can see that this was the big sell-off here from the COVID-19 pandemic back in March of 2020. At the time, SPY fell from about $340 per share all the way down to a low of $218.26. And you can see that within this entire time of SPY selling off, there's really not a single time where it starts to actually make a higher low until we get this low here. So initially we have our initial low down here. It bounces back up. We can see it consolidates here for a few days and then it starts to curl back up and go higher. So this is going to be a confirmation that this is the first higher low after this big sell-off, and that is again a great reversal indicator and would be a good sign for us to buy into SPY. Now the other nice thing about this is depending on how far the initial low is from the higher low, you can use the initial low then as a risk level. So if you were buying into this first higher low, you would be using this $218 level down here as a risk level to cut losses in case the higher low ends up breaking down and the stock continues lower in a downtrend. However, in this case, that actually ended up being the low for this COVID-19 sell-off, and you can see that from that first higher low, we get a really big run up all the way up to, recently hitting a high of 479.98 before we started to pull back here as we have been over the past couple of months. All right, moving on to the second sign of a reversal in the stock market. This one is going to be known as volume exhaustion. So think of the stock as someone that is running. When the stock is in a slow and steady uptrend or slow and steady downtrend, that's kind of the equivalent of a person that is jogging at a slow and steady pace. But once that stock starts to spike up very quickly or sell off very quickly, that's like the person starting to sprint, and inevitably when they're sprinting, they're going to become exhausted and they're going to need a break. And really that same concept can kind of be applied to the stock market as well. When a stock is spiking up too quickly, all of the demand that it takes for that stock to be pushed up that fast is going to eventually slow down, and the sellers are going to at least temporarily take control and cause the stock to pull back. And on the other side of the spectrum, when a stock is selling off very quickly, all of the supply that it takes for that stock to drop that fast is going to eventually slow down. Buyers are going to temporarily take control, and that's going to cause the stock to bounce. So when we're looking for these bounces or these bullish reversals in the stock market, what we're looking for is seller exhaustion. And this is when a stock moves down too much too quickly. Again, that amount of supply is going to eventually become unsustainable, and that's going to cause the stock to bounce. So to give you a little visualizer here, if we take a look at this diagram, we can see that we have a stock that is initially starting off in a slow and steady downtrend. Again, that's kind of the equivalent of a person jogging. And then once it starts to sell off very quickly, that is when the person is starting to sprint. Eventually, they're going to become exhausted, And eventually with the stock, these sellers are going to slow down and the buyers are going to start taking control. And what we're looking for in order to spot this volume exhaustion for a reversal is going to be an exhaustion candle. An exhaustion candle is going to look like any other volume candle, only it's going to be significantly larger than the previous candles were. So this very high relative volume can be a very good indicator that the stock is going to temporarily reverse. That is going to be our signal to buy into the stock. Also, if you pair these exhaustion candles with other factors, maybe like some kind of candlestick pattern, or maybe you see this volume exhaustion at a key level of support on your chart, that's only going to make you more confident in the trade, and that's only going to help you improve your accuracy even more. But anyway, just to give you a quick real-life example of volume exhaustion, if we take this daily chart of SoFi, you can see that there are many different times where the volume was significantly larger than the average volume. And just about every time we get one of these big volume spikes, we can see that it is going to be at a reversal point, whether that be a bullish or a bearish reversal. Here we have a spike up in the price with a big spike in the volume. That is going to be some buyer exhaustion. From there, we get a pullback. The same thing happens here when we get this spike up here. Buyer exhaustion sets in and we get another pullback. You can see there's a little bit of potential volume exhaustion here. This one doesn't quite get a bounce from this level. But down here, as the stock makes new lows, we get another level of volume exhaustion. This one happens to be seller exhaustion, so we see that the price bounces pretty significantly actually from a low of $4.82 up to a few days later being at $8 per share. And again, another smaller level of volume exhaustion here. As the stock spikes up, we get that volume exhaustion candle, and we see that the stock pulls back from there. So simply put, looking out for these stocks that are trading at very high levels of relative volume can be a very good indicator that they may be ready to pull back if they are in an uptrend, or they may be ready to bounce if they are in a downtrend. Alright, so last but not least, the third sign of a stock market reversal is going to be a resistance break. And this is going to be a break above trendline resistance or even flat horizontal resistance. Often this is going to indicate a reversal out of a downtrend. So we can see that over here on the left, we have a flat horizontal line of resistance. The stock kind of trades sideways below that resistance, then we get that breakout and we build some momentum to the upside from there. On the other side of the spectrum here, we have a trendline resistance level, and personally, this is what I prefer to look for when I'm looking for a reversal, because once the stock is able to break out above that level of trendline resistance, that's going to indicate that it's no longer in this downtrend. And from there, a lot of times what we see happen is the stock will start to build some higher lows, and it can even reverse into a full uptrend. So if we take a quick look here at this chart for SOXL, the ETF, this is a stock that has been in a pretty long-term downtrend at this point, following this level of trendline resistance that we can clearly see here. And just yesterday, we actually saw that this started to push above the level of trendline resistance a bit. So this is going to be a close one to watch over the next couple of weeks. This can be a really great swing trade opportunity if it's able to start holding above this level of trendline resistance now, and especially if it's able to start building some higher lows above it. So because of that, I actually put this in the trade plans recently for the Market Master Group traders. And hopefully as the market starts to rebound a little bit, SOXL will follow, and we can see this easily push back above the $20 mark in the next couple of months. But anyway, when it comes to looking for a resistance breakout for a stock market reversal, so far this is a pretty textbook example of what we want to see. That's going to indicate that the momentum to the downside is starting to slow and buyers are starting to take control of the stock. Alright, so that's going to do it for this video. Hopefully you found these 3 signs of a stock market reversal helpful. If you did, please make sure to give the video a like and subscribe to the channel so you don't miss out on future videos. And of course, if you want to learn more about day trading, swing trading, and even long-term investing, make sure to check out my website, Master the Market, which will be linked down below in the description to learn more about our premium education and our interactive trading group. But anyway, thanks for watching the video. I hope you enjoyed, and good luck with your trading.